Okay, fifth waves in equities almost always driven by the emotion of hope. And hope is such an interesting emotion because it tends to fade gradually. And so market tops tend to spread out. And a lot of investors get this false impression that the overall market is healthy when in fact, important sectors have already peaked. And so I want to first show some examples of this topping process in the United States. We published this chart about 3 weeks ago. It shows a 7 month topping process in the US. It began with the Russell 2000 way back on March 15. It ended with the NASDAQ composite on September 7. So it includes all of the major US averages. We've got the transports topped May 7. We've got Value Line Geometric Average topped June 8th. Nurse Composite on September 2nd. That was the same day the S&P peaked. And finally, the NASDAQ on September 9. And the NASDAQ here may be critical because tech shares have obviously been the focal point of the stock mania. So investors appear to be losing hope in this sector as well. Now, you could say, well, this is just US markets, no big deal, but we can substantiate this topping process if we jump across the pond. Here we are looking at various sectors in the stock 600. Now, we actually have a 9 month topping process that began with utilities. That was back on January 8th, spread to resource stocks on May 10. We saw automobiles and parts top on June 7, healthcare on August 23. And look at that bottom graph. Here too, technology was the focal point of the rally, and tech shares peaked on September 6th. That was 3 days before the NASDAQ. So yeah, there is strong evidence that this topping process is now complete. And again, it's almost exclusively driven by hope, right? Especially at the tail end of a long advance. Investors just hope that valuations don't matter. They hope that their latest meme stock catches on, that interest rates will not actually rise. They hope that broken trend line really doesn't mean anything. So fundamentals go out the window, right? Technicals go out the window. The lessons of market history just go out the window. All of this is happening right now, and it's happening alongside wave structures that are complete, not just from March 2020, but also from March of 2009. So this is exactly why we're on high alert, not just for a normal market setback, but for a much, much larger bear market.